Everyone, welcome. You are watching News 9. A day to go for the budget, and India's National Economic Survey is out as the precursor. Over the next 30 minutes or so, we'll tell you all about it. And joining us in the studio is Mitali, Nikore, economist. Thank you, Mitali, for being with us. Let's first take a look at the highlights of the Economic Survey 2024-25 that has been tabled. The real GDP for the financial year 2025 ending in March 2025 has been estimated at 6.4%, and that's been driven by agriculture and the services sector. As far as the coming financial year goes, financial year 2026, GDP growth has been seen in the range of 6.3 to 6.8%. Construction sector growth is 15% above pre-pandemic levels. Agriculture sector continuing to remain strong in the first 9 months of the current financial year, consistently operating well above trend levels. Industrial growth as a whole above pre-pandemic levels, mainly because of agriculture, and of course the services sector, which is also showing robust growth in the recent years. Meanwhile, there's some positive signs for inflation management in India. Retail inflation softening to 4.9% in the first 9 months of the current financial year, from April to December, that is, as compared to 5.4% in the previous year. Global uncertainties and profit taking by FPIs, or foreign portfolio investors, is leading to capital outflows, according to the economic survey. Gross foreign direct investment, or FDI inflows, meanwhile, have shown signs of revival. It's up over $55 billion. NPAs in the banking system at a 12-year low. That's being quoted from the RBI Financial Stability Report. Meanwhile, loans to MSMEs registered a growth of 13% on a year-on-year basis. Exports saw a steady growth in the first 9 months of the financial 25. Exports witnessing 6% growth to reach above $600 billion. Growth in services and goods exports, excluding petroleum and gems and jewelry, was above 10%, 10.5%. At the same time, imports growing by 6.9% in the first 9 months of the financial 2025, reaching over $682 billion. The economic survey also points out that India will need to create 78.5 lakh new non-farm jobs annually. That's every year until the year 2030-32. Now let's bring in the special guests. So joining us on this broadcast, we have Mr. Indranil, Chief Economist at Yes Bank, joining us alongside Mitali, Nikore, Founder and Chief Economist, Nikore Associates, with us here in the studio. Let me begin with you, Indranil. Talk to us your first thoughts on the economic survey. The economic survey clearly batting for deregulation to unlock India's economic potential.
Well, I think absolutely correct, in the sense that what you pointed out are all what we have achieved. But there is, I think, a lot more that you need to achieve if you have to sort of achieve your Viksit Bharat goal in 2047. And for instance, I think what the economic survey also clearly brings out, that the economy will probably need to grow at around 8% for the next couple of decades or so, if that achievement has to be, if we have to achieve the objectives of 2047. Therefore, to that extent, I think throughout the economic survey, it lays out the various sort of facets of economic reforms program that should be taken forward. And of course, deregulation is one of the very important issues, in the sense that what we continue to see today, and while we talk of deregulation, it is more also in terms of the ease of doing business. It talks of reducing the burden of regulatory compliance. I think that is the more crucial issue than what we commonly term as deregulation. And that is expected to therefore provide that productivity boost in the economy that probably is missing in certain sectors.
Right. Let me bring in Mitali at this stage. Mitali, let's just first talk about the GDP projection, 6.3 to 6.8%. That has got many worried.
Yeah, absolutely. First of all, Krishna, thanks a lot for having me in the studio today. I think for me, the number that really, there are two numbers that really stand out in this entire economic survey. The first one, of course, is the GDP projection, because as Indranil ji just said, if we want to achieve the goals of Viksit Bharat by 2047, if that's the target, then we need a GDP growth of nearly above 8% per year on average every year. But we're not going to be achieving that this year or next year, and maybe even the year after that, because we are seeing global headwinds changing. We are seeing a changing global environment, a very belligerent United States of America. So in this, global scenario, it's very hard to achieve that above 8% number. And, the 6.3 to 6.8 is also a very wide range. I feel like we'll end up somewhere towards the 6.3 number. The second number which stands out to me is the number of jobs that have to be created annually. The 78.5 lakh or 7.8 million number that we're talking about, because at the end of the day, 8 million jobs a year we have not managed to create in the last 10 years or even the last 15 years, and we've seen above 7% growth rates in most of the last 10 years. So can our economy really create those kind of jobs in the advent of automation in the manufacturing sector, in the advent of artificial intelligence in the services sector, is something to be thought about. And also, can we create better, smarter jobs in the agriculture sector? Is one of the major questions that I felt that the economic survey should have dealt with. Like, how can we bring in better technology in agriculture, which continues to employ nearly half of our population, is something that we have not thought about, and from a climate change perspective should be thinking about.
Okay, Indranil, let's then focus on the agriculture sector. The economic survey clearly pointing out that the agriculture sector remains strong. In fact, was one of the key drivers of India's GDP growth in the first 9 months of the current financial year. The report says that it's consistently operating well above trend levels. What do you make of that?
Well, I think definitely these are positives, and these add to the GDP growth, and also to a certain extent to the rural consumption bias. But having said that, the worry that I carry is that if you actually look back at the financial stability report that the RBI has brought out, it clearly says that there is some sort of stress in the loan book at the lower segment of the income level. And very typically, people who borrow less than 50,000 rupees, they possibly at the time of a new loan being sanctioned in his name, has three other loans in the same name, and operational loans in the same name. So the point that I'm trying to make is that despite the upside that we see to the agricultural production, the question that I need to ask is whether there is some amount of indebtedness that continues, which, despite the agricultural production going up, can actually not provide that adequate boost to consumption from the rural sector that I am looking at.
Right.
The second issue, of course, is that the price, there's a huge difference between the price from the farm gate to the food plate, and continuous wastages, especially in terms of tomato, which provides that volatility in the agricultural produce prices. So these are some of the issues that I think the government and the budget probably needs to look at very critically to say that the agricultural sector is doing well.
Right, Mitali, you wanted to weigh in on that. The agriculture sector, on the surface of it all, is driving India's economy at this stage. But the fact of the matter is that huge lacunas lie.
Yeah, absolutely, Krishna. I mean, if you think about it, there is so much scope for innovation in agriculture. There is so much scope for, I think if we look at the podcast that Nikhil Kamath had done with the Prime Minister a few weeks back, and even another one that he did, he spoke about the makhana. And that's just one product. And the fact that it has a 3,000 crore potential market share. Now, if we look at the range of commodities that can be produced on Indian soil, in the good growing conditions that we have in different parts of the country, we can create a market for organic products, we can create a market for premium agricultural products. But we're not thinking completely in that direction. Okay. At least with millets, we were able to diversify our grain industry to some extent. But even now, we are not thinking sufficiently about agriculture reform. We continue to produce a lot more of rice and wheat. So I think somewhere we have to start thinking about better, more climate sensitive agriculture production practices, okay, as well as commodities.
Okay. I'm asking this question because the agricultural output also has a direct impact on inflation. You see, the food inflation is at 6.5% for the first 9 months of this year. Overall, retail inflation has softened from 5.4% to 9%. But the fact of the matter is that the food inflation remains sticky, especially Indranil, you were talking about tomatoes. Tomatoes, onions, and potatoes, top are the ones that are ensuring that the food inflation remains high.
Absolutely, and which necessarily points to the direction of the fact that we need to have the value chain structure of the food gate to the farm plate, farm gate to the food plate, really in order so as to reduce these wastages. And tomato obviously is a big example. The other issues that even the previous budget had outlaid is how we can actually provide adequate resources for research and development in a climate resistance crop. Now, the whole concept of food security, in my opinion, needs to be relooked at given the fact that there is huge sort of volatility in terms of climates that we see globally. And at various points in time, either the wheat prices shoot through the roof or something else is a problem. So these are some of the factors that need to be taken into consideration, and development of the agricultural sector or energizing the agricultural sector also to a certain extent may help the government in terms of the employment generation, because if you really look at our manufacturing sector, despite the PLIs and everything, our manufacturing sector still continues to be capital intensive while we have surplus labor. So somewhere I think the thought process in terms of providing the boost to the manufacturing sector versus the creation of employment and absorption of labor is something that needs to be realigned. And that to that extent, if we are able to even sort of provide adequate marketable surplus from even the smaller farmers by, say, a corporatization of the farming structure, that possibly will also help tap the potential of the agricultural sector and its income levels.
Right. Sticking with inflation, Mitali, there's also mention of how possibly commodity price inflation could be coming down in the next financial year, because of which inflation, overall inflation levels could come down, which means that you can expect better news from inflation going forward, at least according to the economic survey.
No, definitely. I mean, Krishna, when we look at the trends, firstly, I think the RBI has done a phenomenal job on inflation management over the last 7 to 8 years since we brought in the inflation targeting regime. So they have never actually let inflation exceed 7% even in the last 7 to 8 years, which is, I think, a big achievement. Now, when we look at the current trends on inflation, definitely we are going to start seeing a decline, because at the cyclical level also that's happening. But the main reason for inflation every cycle that we see the uptake is because of the supply chain impacts. At the end of the day, food inflation remains our number one driver for inflation, and the number two driver is fuel inflation. Now we know that fuel we will be importing. So if we have to actually reduce fuel inflation, we have to invest in renewable energy. We have to invest more and more in solar plants and distributed power supply structures. And to some extent, I would have liked to see more thinking from the economic survey on this. And the second point is around food inflation, and for that we are already working. I think on that a lot of work is being done in terms of the logistics infrastructure, which is being set up under the national logistics policy to reduce the transport cost and logistics cost of getting food supplies from a farm to a consumption center, or even exporting. So I think that area is actually doing well, but the area where we need to do more is on the fuel inflation control, and this is the time to invest in this infrastructure rather than only relying on monetary management.
Okay. Talking about imports, let's then also bring in the import data that we have from the National Economic Survey. Imports growing by 6.9% in the first 9 months of the current financial year. It's at $682.2 billion, Indranil, whereas India's exports in the same time is $602 billion with a 6% growth. These numbers also paint a very mixed bag kind of a picture, don't they?
Yeah, it does. But with due consideration, I think imports have also been boosted up quite significantly because of the gold imports.
Okay.
So I'm not sure if that's a productive import that we are doing. Having said that, I think Mitali did point out of the reliance that India still has on fuel imports. which we possibly can't do anything much. But as we expect the global economy to slow down to a certain extent, we'll possibly get the benefits over there. But what we actually see is that these are specifically the elements which have actually boosted the import side. The non-oil, non-gold imports is also relatively on the stronger side, or were relatively on the stronger side. My sense there is that in the first half of the financial year, we had urban consumption demand continuing in a very significant way, which to a certain extent has been slowing down, and therefore the non-oil, non-gold import will possibly, to a certain extent, also slow down. But point made, exports, I think there is a problem. And even if I look at the exports as a proportion of GDP, that has actually stuck at around 10.5 to 11%, even with all the efforts of the government. So I think we need to get out over there, have more FTAs coming up. We need to have a clear sort of targeted sort of marketing effort in terms of growing our exports, apart from some of the sort of benefits that the exporters are generally given in terms of, say, interest subvention, etc. My hope to a certain extent also is that some of the negative effects of the global slowdown can actually be neutralized by the depreciation of the currency, which necessarily means that I'm expecting the depreciation of the currency to continue, and the RBI possibly allowing the currency to realign to the fair value levels.
Mitali, your take on the fact that you have exports in from India, especially the non gems and jewelry and the non gold exports, at 6%. But the fact of the matter is that when our exports are growing at 6%, our imports are growing at nearly 7%.
Yeah, absolutely, Krishna. But I think, as Indranil sir also said, a lot of the growth in imports this year is actually a little bit different from every other year, simply because this year we've had higher than average gold imports because of monetary stabilization concerns. Many of them were actually commissioned by the RBI themselves, as imports. And the second reason, of course, why imports have been a little bit higher this year have also been because of higher fuel imports, which came in with some growing demand. So I would say that impact is a bit cyclical, not structural. Having said that, it is extremely important to support the exporters. I have been interacting with groups after group of industries, particularly MSMEs who participate in global supply chains, and they are requesting the government again and again to simplify the processes of exports, to reduce custom duties also, because what happens many times is, if you want to export a commodity A, sometimes you might import a part that goes into producing that commodity A, and you end up paying a high custom duty even on importing the raw materials for producing a final product. And therefore, it's very important to look at rationalizing custom duties, not only to benefit our own industry, but also to make our goods more competitive in a very difficult trade environment, which is likely to come ahead in 2025 and 2026.
Okay, you were talking about the MSMEs. The fact of the matter is that the survey also talks about loans. Credit to MSMEs witnessing a growth of 13% in the banking sector. Indranil, let's talk about that and about the fact that NPAs in India's banking system are at a 12-year low. And in fact, the economic survey quoting RBI's financial stability report for that.
I think we have been talking about the health of the banking sector for quite some time, in the sense that yes, the NPAs and the GNPAs has been coming down. But to a certain extent, the reduction in the NPAs and the GNPAs, if you very clearly look at the RBI reports, is also because of significant write-offs on the retail lending side. So that's the very point that I mentioned at the very beginning, is that my concern for the Indian economy is whether there is a level of indebtedness that we are carrying at the lower segment of the population that might actually be very difficult to unwind, and some amount of debt weight loss out of the COVID may need to carry. On the MSMEs, I think there was a clear policy for the MSMEs in the previous budget in terms of extending the loan guarantee scheme for the MSMEs. And when the loan guarantee scheme was run during the COVID period, we did see the loans to the MSMEs from the banking sector shoot up quite significantly, even though loans to the larger industries were actually sort of coming down and sort of settling at lower levels. So that tended to reverse when that policy was taken away. But the last budget again sort of brought back that loan guarantee scheme. And that's possibly one reason why the MSME sector is pulling a significant amount of loans in this condition, given the fact that it automatically sort of differentiates a certain sector in terms of the risk assessment because of the guarantee being written on it. So that I think is the most important perspective. From the banking sector, I think the positive thing is that the pace of unsecured loan growth has been coming down, which is something that the RBI had been sort of envisaging. On the other hand, however, the credit deposit ratio, so to say, is still sticking at around 80%, which I'm not sure whether the RBI is liking. And that is some of the so therefore there are some sort of inherent risks within the lending structure that we can see, even though we may talk about banking sector balance sheets overall remaining healthy, and the most sort of adverse stress scenarios, as the RBI's FSR report has pointed out, will not erode the capital structure of India's banks.
Okay. Let's quickly, put the spotlight on money coming into India and money going out of India. The economic survey admitted to the fact that the global uncertainties and profit taking by FPIs or foreign portfolio investors did lead to capital outflows. We all know about it. We all been witnessing what's happening in India's stock markets in terms of foreign money being pulled out of India's stock markets. But at the same time, as far as FDI is concerned, or foreign direct investment, gross FDI inflows into India are showing signs of revival. Mitali, if you're worried about money going out to stock markets, there is some solace in the fact that foreign direct investment into India is continuing to grow.
Absolutely, Krishna. I think at this point in time, when we look at the global scenario, there are few economies that are highly performing economies which are economically sound on a medium term basis. India has proved in the last decade to be one of the fastest growing emerging economies of the world. India has proven to have a stable political environment. India has proven that India has the potential through its domestic consumption as well as manufacturing activities as well as services sector to be a robust, diversified economy. So these economic fundamentals make India today a very, very safe bet for a foreign investor who wants to come in and park their capital, not just for making a gain on their equity return over just 3 months and just exit the market, but somebody who wants to come in and actually invest for the longer term horizon and help to build the economy, build it going forward. So therefore, I am very enthusiastic about the foreign direct investment returns and also about the FDI inflows, because India continues to be, even with a strong US economy, even with strength in other economies like China reviving, we will still see India to be a very good alternative for a diversified portfolio.
Okay. Okay. Let me then bring in the most important question. The economic survey, Indranil, is like a precursor to the budget, supposedly giving a direction in which the budget should be. What would be your expectations from budget 2025 based on the economic survey?
Well, I would slightly differ. I generally don't take the economic survey as a precursor to the budget.
Okay.
It's a different issue that in the last budget we saw a lot of reflections of the economic survey. That's one part of the story. Separately, in terms of the budget expectations, I think very critically, I don't think there will be a challenge in meeting the 4.5% which the finance minister had been promising. So that's easily done. The second, I think, if I take sort of cognizance of the last year's budget, it was very critically said that there were 9 areas that they were looking at, which included the employment and the skill generation, the infrastructure, the social sector, the women empowerment, and how youth can actually be sort of energized in the current domestic atmosphere. So those are some of the things that it was very clearly highlighted form the basis of future years' budgets. And more sectors and more areas can actually get added, which necessarily means that we should be very solidly on the reforms path that the previous budgets have chosen to sort of in terms of achieving the Viksit Bharat objective. Now, very specifically to say, I think the critical area that the budget needs to look at is the employment and the skill generation. And without employment and the skill generation, today's per capita income is $2,500 only. Compares relatively quite poorly even with peer rated economies. And unless that significantly tends to move up, the sustaining consumption power of the domestic economy that we tend to talk about, be it rural or be it urban, generally sort of doesn't appear in front of my eyes, which necessarily means that the fiscal headroom in terms of providing continuously infrastructure boost, either in the form of roads and railways, plus because we have done so much in those areas, the absorptive capacity remains relatively on the lower side. And that's the sort of course correction that we need to do. In terms of infrastructure, I think if you really want to link it to the economic survey, I think the economic survey makes it pretty clear that there are certain thrust areas which include, say, e-vehicles or sort of alternative energy in terms of solar energy. A significant amount of imports continue to come from China. So while it doesn't make a China name very specific and clear, it does say that a country which where India has a very large trade deficit. Most of these imports come from there,
Right.
which necessarily means we need to refocus on
Yeah.
the areas in terms of manufacturing that we look at.
Right. One last word in from you, Mitali. There are two big focus points. One is definitely deregulation to be the focus of economic reforms going forward, so that the cost of doing business is low and the ease of doing business, ease of business. Doing business 2.0 is what is suggested in the economic survey, and apart from the fact that reducing dependency from other countries, especially China, for making products.
Absolutely, Krishna. I mean, I think that one thing which is central for this budget, for which this government has to deliver. We looked at the poll results earlier this year. The writing is on the wall. People are expecting a jobs-centric budget. The jobs numbers have been laid out also by the economic survey of the number of jobs that should be created every year. So the government has to work on two sides. The first side is to improve the demand for labor, which means ease of doing business, deregulation, supporting industry, bringing in new investment. And the second, it has to work on skill training and employability of our labor. Our workers have to be able to work with machines, be more productive, be more digitally literate. And this entire effort has to include women to improve the female labor force participation rate. A consistent effort that we've seen over the last 5 years will, I hope, continue this year as well.
All right, we will leave it at that. Completely out of time over here. Mitali, Nikore, founder and chief economist, Nikore Associates. Thank you so much for being with us. Mr. Indranil Pan, chief economist, Yes Bank. Thank you so much for taking time out to be with us. And with that, it's a wrap here from my side. Thank you so much for watching. This is Krishnakumar signing off.